All right, so welcome to How to Be a Successful Investor. My name is Tyler Ballhorn, founder of Stockscores.com. I've been trading for 30 years. I've been teaching people how to trade for 20 years. And tonight I'm going to talk a little bit about the Stockscores Investor Approach. We have two sort of membership types. We have Stockscores Investor, which is looking for those longer term trades where you hold stocks for weeks, months, even years. And then we have the active trader approach where you hold stocks for less than a day, a few days, up to maybe 2 weeks. And so again, on Wednesday at 2 o'clock Pacific time, 5 o'clock Eastern time, I will do the presentation on day trading and swing trading. But tonight, it is all about the Stockscores Investor Approach. So I will explain what that approach is, the sort of theory behind it. We'll look at the 6 investor strategies that I teach and use. I will show you the tools that I utilize to identify opportunities and walk through the process to find stocks to trade, whether it's in your cash account or perhaps in a retirement account, RRSP, TFSA, 401k, that kind of thing. We'll talk about the investor education that Stockscores offers and membership to the website so that you can use the tools that I've built. I'll take you step by step through the learning process. We've got a round of education coming up starting May 1st, and I will take you through the different stages of that learning process, the benefits of going through that process, and then how to join. And then at the end, I will take your stock questions and any general questions that you may have. All right, so let's start with the Stockscores Investor Approach. Now, I've talked about this concept in other webinars, so I'll touch on it fairly briefly tonight. Some of the past webinars that you can watch on the Stockscores YouTube channel will go more into the theory of some of the things that I talk about. Tonight's presentation will be a little more high-level overview of the different things that I do as an investor. So very simply, stocks go up in price because new information motivates buyers to pay more. When Disney announced that they were launching a streaming service to compete with Netflix, their stock jumped in price. The buyers felt that such a service made the company worth more. We're in the heart of earnings season. I think there's 200 companies that will announce their earnings this week. And so when some of those announcements come out, you will get the market adjusting the price up or down for those announcements. So if a company beats earnings expectations, if the market expected them to make $1 a share and they make $1.30 a share, it's a pretty big beat. And so you might see that stock jump up in price in reaction. So it's all about information. But what we have found through 30 years of trading is that the spread of information is not fair. There's some people who get information before others. And sometimes that's because they are insiders and they have a relationship with a company that gives them the information early. Sometimes it's because they are large investors with considerable resources and able to uncover information that is not widely known. Sometimes it's luck, to be honest. And for me, it's because I follow market activity and I follow the people that have the best information. When a large investor knows of something significant that is coming, they act in the market, they buy a lot of shares, and in doing so, they create trading activity. The stock trades more volume, it perhaps moves up in price as that buyer is aggressive in buying the stock. And that creates this abnormal trading activity that I talk about a lot. Abnormal trading activity tells us that a large investor has found a reason to pay more. And ironically, it actually doesn't matter if they're right. Because if a large investor decides that they want to buy 5 million shares over the next month of a stock, they may have all the justification in the world for doing that. But even if they're wrong, the simple fact that they are buying 5 million shares of that particular company over the course of a month means that they will bring in a lot of demand for that stock and push it up in price. And even if their reason for buying those shares is incorrect, we can ride their coattails simply because they will push the stock up in price. And so it doesn't really matter whether they have really good information or whether they've done really good analysis. If Warren Buffett wants to buy IBM and wants to buy a lot of it, he's going to push the price of IBM higher. And I use IBM because it was one of Buffett's mistakes of the last few years, where he bought the company, fairly sizable block, and then realized later that it was for the wrong reasons and ended up selling the stock at I think a loss. I'm not entirely certain if it was a loss, but it wasn't a big profit for sure. So abnormal trading activity tells us that a large investor has found a reason to pay more. Most stocks that beat the market, let's say a stock that goes into an upward trend over a few weeks or months, almost, I'm going to say 95% of those stocks will start their market-beating trend with abnormal activity. And so a number of years ago, I created my own indicator to find these stocks, because it's not sufficient to say, I want to buy stocks that are up at least 10%, or I want to buy stocks that trade twice their normal volume. I mean, that's a really simplified way to do it, but it's actually theoretically not that correct, and it will get you a lot of noise. It'll lead you to buying stocks that really don't fit the parameter of what the concept is. And so I created my own indicator that uses a little bit more sophisticated statistical analysis of markets, utilizes computing power, and it measures price and volume to identify abnormal trading activity. And I call it the Stockscores Action Candle. It's the basis for most of my strategies. Maybe I'm going to say 90% of my strategies revolve around the Stockscores Action Candle. And it really looks for stocks that have motivated buyers or sellers. Now, tonight's presentation, I'm going to focus on buying. However, I know some of you may like to short sell stocks, and we can use the action candle for short selling as well. I've got strategies for short selling. When I'm day trading in particular, I short sell often because markets don't always go up. Sometimes they go down. But just for simplicity, tonight's presentation will focus on buying. And we'll look at what we call bullish Stockscores action candles. Those are action candles where the price action is to the upside. And that is an indication, in some cases, that the stock has a high probability of moving into an upward trend. So if we look at a chart here, this is a stock that's listed on the Toronto Stock Exchange, one of the better performers of the last few months. I put a little pink dot on the chart right there. That pink dot represents an action candle. If you go to the Stockscores website, you won't actually see a pink dot. I will show you in a moment how we use the Stockscores market scan tool to find stocks that have abnormal price action, abnormal volume. And we can imagine that a pink dot would be there. I can put a pink dot in TradeStation, which is the software platform that I use to develop strategies. So what I've done is I use that as kind of my lab. I come up with ideas, I program them into TradeStation, I test them in TradeStation, I can plot my own indicators in TradeStation. In that case, it actually plots a pink dot because I programmed it to do so. So here's another stock that's done quite well. This stock listed on the NASDAQ Stock Exchange. It made an action candle mid-February. You can see the strong volume there, strong price action. It also had the right kind of pattern, because it's not enough to have an action candle, it also has to have the right kind of pattern. And pattern recognition is something that you need to learn, something that I spend a good deal of time teaching my students, so that you know that this is a good action candle and this is not. And there is a difference in the pattern into that action candle. And if you can understand 6 simple concepts, namely support, resistance, optimism, pessimism, price volatility, and abnormal activity, if you understand those 6 things, you can interpret any chart pattern in less than 10 seconds. Once you get practiced at it and good at it, you can probably do it in 2 seconds. I go through charts really quickly because I've practiced for 30 years. Someone who's maybe just taken one of my courses might take 15 or 20 seconds to evaluate a stock, but in time, you can get pretty quick at it. And that allows you to go through a lot of stocks in a short amount of time. So what's key here is that this stock was at $10.56 in mid-February. Now it's at $15. So what's that, about a 45% return in a few months? If we go back to the previous example, late in January, stock's at just under $1.30. Now it's at $2. It's a big jump, 50% jump in price in just a few months. And the tools that I show you tonight will allow you to find these things. And I will show you how you can learn how to evaluate the charts so that you know that this is the right action candle to buy, and Well, I don't know if there's any others. This one's another action candle right there. But that one was not ideal, although we might add to our position there doing something called scaling, which is a way to make the most of your winners. All right, so let's keep on moving along to the different types of strategies that use my indicators. And I think all of these will use the action candle, but we'll go through them one at a time. Now, at the top of the presentation, just before I started recording the video, we ran a little poll which asked, what time of day are you interested in doing your research? And about half said that they could do the research during the trading day. About 38% said they could do it after the market closes in the evenings, but on a daily basis. And then about 12% said they could do it on the weekends. And so there's a strategy for all of those people. The Stockscores Simple Daily Strategy looks for action candles from predictive chart patterns, particularly stocks that have optimism. So in this strategy, we look for stocks that have a sentiment stock score of at least 60 and a signal stock score of at least 80, a predictive chart pattern, so it's got to have the right kind of pattern, and it's got to have some abnormal breakout from that pattern. It takes about 15 minutes a day to search. You can do that at the end of the trading day, maybe in the last hour of the trading day, or very easily in the market or after the market closes in the evenings. You can run it every day if you like. If you don't do it every day, then you just won't find things that might appear on a particular day that you miss. And most of people, including myself, will do this on a daily basis. It takes 10 or 15 minutes a day. Your typical hold period is between 2 weeks and 6 months. And it's probably my oldest and simplest strategy, hence the name Stockscores Simple Daily. Now, the Simple Weekly is a very similar strategy, but the difference here is instead of looking at daily charts, we use this strategy with weekly charts. And therefore, you don't have to do it every day. You can only do it once a week. Now, you can do it on the weekends, ideally. You can do it on Thursdays if you want. But for the most part, I'd like to run this Friday, Saturday, Sunday, something like that. And it's looking for those longer term trade setups where the hold period will be longer, perhaps 2 months to 2 years. Going to do fewer trades per year. This is a great strategy for someone trying to manage their own retirement portfolio, perhaps only doing 10 trades a year. You can do more. This strategy will generate more picks than that, but that's the kind of idea. Someone that doesn't want to be married to the stock market, not wanting to watch it all the time. You buy 10, 15 stocks a year, and once a week you check your portfolio and see if there's any adjustments that have to be made. All right, strategy number 3 is the abnormal break strategy. I think we'll run this one tonight together. Again, 15 minutes a day, similar to the Stockscores Simple strategy, but does not utilize the Stockscores indicators because we don't need as much optimism. The emphasis here is more on the abnormal activity that we want to see. But again, it takes 15 minutes a day, maybe even 5 minutes. Ideally, you would do that work in the final half an hour of the trading day or after the close. And there's advantages to doing it in the final half an hour, and there are advantages to doing it after the close. By doing it after the close, often we will wait for these stocks that make strong price moves to make a pullback. And in doing so, we increase our probability of success. But if we do it in the final half an hour, we can find those hot stocks that are going to move up the next day right away. And so if you can do it in the final half an hour, your probability of success might be a little lower, but your average profit per trade might be a little bit higher. Typical hold period here is 1 to 4 weeks. And again, we're looking for daily action candles breaking from low price volatility. And just to reiterate, to be able to do this, you have to understand 6 concepts: optimism, pessimism, price volatility, abnormal activity, support, resistance. I say those things over and over again. They're explained in a 35-minute video in the Stockscores Education Center, which I'll show you in a moment. Stockscores Simple ETF, essentially the Stockscores Simple strategy, but applied to a list of exchange-traded funds. Some of you may be more conservative and like to focus more on ETFs rather than individual stocks. There is some risk mitigation in that because ETFs tend to be less volatile. We don't require the same emphasis on abnormal volume when trading an ETF because the effect of the abnormality waters down a little bit across an exchange traded fund, and so abnormal volume just isn't as important. It's not one of the rules where it is in the Stockscores Simple strategy or the Stockscores Simple Weekly strategy. Okay, and the final two investor strategies. First one here is the bottom fishing strategy. This is a strategy that I really don't use all of the time. More so, I use this after the market has had a pullback. So for example, in November and December, we had a fairly significant correction. And then starting December 26th, the market started to bottom and move up. And so the bottom fishing strategy was useful in that time frame. It's looking for stocks that are showing a typical reversal pattern that I like to see. And it has 3 stages: break of a downward trend line, build a rising bottom, break from a rising bottom. Again, the pattern is the key. I can teach you what to look for, but it's pretty simple 3 things. We're looking for stocks that have been weak, strong, good companies that are on sale because of some problem that has happened. And oftentimes it is weakness in the overall market. And then finally, we have the action breaks strategy, which is my latest investor strategy. And it's borderline swing trade strategy. It's not one where you're going to hold stocks for too long, typically 2 to 4 weeks perhaps. Sometimes they can be longer, but usually that's about all. Again, it takes about 15 minutes to run this process. You can do it in the final 30 minutes of the day. You can do it after the market close. And what we're looking for here is purely an action candle breaking a downward trend line. There's some other criteria in the pattern that improve the quality, but that's the basic idea. All right, so we're going to talk about tools in a moment and go through some market scans. I'll take you through the step-by-step process that I would use with these strategies. We'll pick 1 or 2 to focus on tonight. But I created some specialized tools to identify trading opportunities because I didn't find that there was anything out there that would do it for me. So I started Stockscores in the year 2000, and we built our first market scan tool. Since then, we've made updates to it a number of times, but conceptually, it's pretty much the same thing. The idea here is I want to search the entire market for stocks that are behaving abnormally with predictive chart patterns. And if I had to do that 1 chart at a time, it would take me hours, if not days. But with the market scan tool, I can filter the market from 7 to 10,000 stocks down to 20 or 30 where I can inspect those charts to really find the best ones. So it's really a time-saving tool. And time is money. And of course, if you can find opportunities before the rest of the world does, you can capitalize on it. So we'll try to do that a little bit tonight. I'm going to run a scan in just a moment. Once we've done a scan, we have to view the charts. And so Stockscores, the website, has charts for you to look at, nice, big, easy to read charts. And we also have a trading simulator for my students who want to practice before they risk real money. I built a simulator where you can buy and sell as if it was real money, but it's not real money. And it measures your performance in the reward for risk metric that I often talk about in my webinars. And so you can track the reward for risk that you earn on the simulated trades that you do. And after some practice, you can say, okay, I did 20 trades and I made, a reward for risk of 11. If I was risking $100, that would mean I had $1,100 in profit. Now, perhaps you have the confidence, the skill has been developed a little bit so that you are now ready to trade with real money, and you can start trading with real money, but with a low amount of risk, and then you slowly increase your risk as you gain success. And that's really the process that I recommend all of my students go through to develop their trading skill. Start with the simulator, then start with a low amount of risk, and as you get success, increase your risk tolerance so that you're never putting a lot of your capital base to risk. You want to make your number one goal capital preservation. And I want all of my students to take that path because the market's here forever. There's no rush. Take it step by step. Rather than try to make $1 million tomorrow, treat it as a marathon, not a sprint. You'll get there. You got to practice and learn and ask me for help as you're learning. All right, so let's talk about the process. So as you may know, each week on YouTube, I put up a video called The Market Minutes. And that video helps you to understand the general outlook that I have for the market. And so I've been bullish on stocks for a number of months. And that's one of the things that's important. If the trend is up, then you want to favor buying. If the trend is down, then you want to favor short selling. So because the trend is up right now, I'm still favoring buying. I do think there's some risk of the trend ending soon, but I think it may only be a brief period with a little bit of a pullback once we hit resistance at the all-time highs, which we're quite close to right now. And anyway, so if you haven't been watching those videos on YouTube, just go to YouTube, search for Stockscores, subscribe to my channel, and each week you can watch that video. It's free. May as well learn that. I also give a little bit of a trading lesson each week, talk about some trades of the week, those kind of things. Lots of great stuff in that video, and it's getting more and more popular. It's probably twice as popular today as it was just a month ago, so it's starting to gather some momentum. All right, so the next step is to run the appropriate market scan based on the outlook. And so right now I'm bullish, so we're going to run some buy scans in just a moment. We then inspect the charts for the patterns I teach you to look for, enter positions based on a risk calculation, which is dependent upon your risk tolerance. How much are you willing to lose or able to lose on any one trade? And that risk tolerance and the riskiness of the stock determines your position size. You buy less of a more volatile stock than you would of a less volatile stock because the percentage risk is higher on that perhaps lower priced volatile stock. Once you're in your positions, then you have to monitor those positions for exit signals. You would do that daily or weekly depending on the strategy. And then when you exit a trade, it's always a good idea to put that trade in some kind of a journal so that you can learn from it, track your performance, that sort of thing. All right, so let's jump over to the Stockscores website and run some market scans. So we will run, let's run the action breaks first. Action candle breaks right there. Run that strategy. Now remember I said this is a time-saving tool, so you just saw how quick that was. It just went through every stock listed in North America, and it found 10 stocks that today are making an abnormal price move through some line of resistance. Now we still have to inspect these charts to see if they have the right kind of chart pattern, and most of them won't. You know, the reality is out of 10, 20 stocks, I may only like one or two. And so what I'm going to do now is go through these charts one at a time and give you my thoughts on some of them. So here's a stock that has been in a downward trend, had very strong volume, good price action today. It's a real penny stock, trading at only 16 cents a share. So that in itself is a little bit of a negative as it's not very liquid or actively traded. But I still think that this is a decent chart. I'd give this a 6 out of 10. That means I think it has a 60% chance of moving higher. Let's go to the next one. And I've organized this list by price. So we're looking at the lower priced ones first. There you can see the abnormal volume, the abnormal price action, breaking a downward trend line. That's what this strategy is all about. This stock's probably going to find some resistance in this range. So the upside potential for the risk isn't great. I would also give this one a 6 out of 10, maybe even a 5.5, meaning 55% chance of going higher. I think we can do better. So let's keep buzzing through. This one doesn't have the right kind of pattern at all, so I'm just going to skip it. Nor does that one. Now you notice I'm going through these quite quickly. I'm looking for some very specific things in the chart pattern. And it will take me 1 to 2 hours to teach you what those things are. And then it will take you some time to practice and ask me for my opinion on the stocks that you pick. But once you've done that for a little while, it actually starts to get fairly easy. Now, if you read my weekly newsletter, which just came out today, I always launch it on Monday. This was one of the stocks that I picked. It is breaking a pullback, had a nice action candle, nice volume, has been already trending higher. This is called a flag pattern, so it went down for a bit, and now it's breaking the flag. I think this stock has a 65 to 70% chance of moving higher, therefore it's a 6.5 to 7 out of 10. Pretty good. Probably it'll get stuck at $6, which was the highs there. It'll go up maybe to hit that tomorrow, stall perhaps a couple days, and then I think ultimately break through it. It's in the energy sector, which helps as the energy sector is gathering some upside momentum. So I think that's pretty good. Okay, I don't think that one's quite good enough. And then this is the other one that I wrote about in the newsletter because I did this strategy for the strategy of the week in the newsletter. And there you have a break from a little head and shoulders bottom pattern. Some of you may know something about chart analysis and know that that's a head and shoulders bottom pattern. But you can see the strong volume, strong price action breaking through this resistance level. Next stop probably gets up to $17, $18 a share where it will stall. But ultimately, I think it can get up into the $24 range. I would give this one a 7 out of 10. So that's the strategy, or at least that's the execution of the strategy. Let's do one more market scan. Let's run the abnormal break scan on the Canadian market. So I know many of you here are Canadian. You probably want to trade Canadian stocks. We can do both. And this time, instead of doing little or bigger charts, I'm going to do smaller ones. So this is an oil service company breaking from what's called a cup and handle pattern. There's a break there. Volume isn't real strong. I wish the volume was a little stronger. This is more a sector play. A lot of the oil service companies were up today. Transocean, Halliburton, they were all up today nicely as oil prices are continuing to recover. So I'd give this a 6.5 out of 10. Pretty good, 65% chance of going up. That's Reservoir Logics. I'm just going to take a look at a 3-year chart here. This is good, more of a continuation of the longer term upward trend. Longer term upward trend started back there. Then we broke a pullback right there about 2 months ago. Now we're breaking it again. It'll probably stall at $4, go sideways for a bit, and then I think continue higher. I'd give this a 6 out of 10. So notice I'm doing this pretty quickly, and it's because I practice this stuff, but anyone can practice. You just have to know what to look for. Here's a nice, what's called an ascending triangle pattern. Remember I talked about the bottom fishing strategy? This is a great example of a bottom fish. The only negative is that it doesn't have strong volume, and so I'll give this a 6 out of 10. If it had strong volume, then I'd give it a 7. All right, I think that's it. So let's jump back to the presentation, continue along. So investor education and membership. I can teach you how to manage your own money. I can teach you my approach to find winning stocks, knowing when to enter. That is when to buy, or if you want to short sell, when to short sell. When to exit, I will give you the specific rules for when to exit, step by step, logic-based rules, not gut feel type rules. This is all logic stuff. I'll also teach you how many shares to buy based on your risk tolerance. Someone with $1 million portfolio is going to take different position sizes than someone with a $5,000 portfolio, and we have to understand how to size our positions, where to focus based on our risk tolerance, our portfolio size, our skill level, our age, how close to retirement we are. So that's a part of what I teach as well. How to minimize losses. Capital preservation is our #1 goal. And so we need to have a method to know when to exit when the market has proven us wrong. And it is a fool's game to say, I will sell a stock when it goes down 10% or when it goes down $1. Because applying that rule to a $2 stock is very different than applying that rule to a $20 stock or a $200 stock. The $200 stock will have much less volatility typically than the $2 stock. And so you cannot use a arbitrary percentage or dollar drawdown number to know when to get out. You have to use something that's based on the market's opinion, and I will show you how to read the market opinion in a stock chart. We also want to maximize gains, stick with our winners as long as possible, add to our winners when we have a winner. That's something called scaling, so we can significantly improve our long-term profitability by adding to our winners. And that's another thing that I think is important to learn, and I will teach you that as well. Step-by-step process to find trades. Step 1, pull up the scan. Step 2, run the scan. Step 3, go through the charts, look for these 4 things. It's very specific about what I look for because human beings are slaves to our emotions. And so we have to really make things as mechanical as possible so that we don't get our human biases and emotions into the equation. Because if you do, fear and greed will take a role, an important role, and really a role that should not be put into our trading decision. I'll teach you how to use the Stockscores tools. I've shown you a little bit about the market scan tool, but there are other tools on the Stockscores website which are quite helpful. And ultimately, I'm going to teach you how to analyze any stock, any market, any currency, any futures contract, anything that has a chart, real estate market, anything that has a chart. You can analyze that in 10 seconds. And actually, with practice, you can get that down to 1 or 2 seconds. Look at a stock and know almost instantly whether it's something worth trading or not, because it's Pretty simple. Understand those 6 things, practice understanding how they work together, and then you can start to really do much better in the market and improve your longer term performance. So I'm running an education cycle that starts May 1st. And this education cycle is unique because for the first time in 5 years, I'm going to teach a live class, actually 2 live classes in a classroom. But here's the process for learning my approach. Starting off, you review the material in the Stockscores Education Center. So let's jump over to the Stockscores website again, go to Trader Training. So for members of the Stockscores website, those who've purchased the Investor course or the Active Trader course, you have access to all of this online material. So you need to learn what are the 6 elements of chart patterns. There is a written lesson, there is a video, there is an assignment, and there is a test. And you need to go through these things. That'll take you about 1 hour for that particular module. And it's one of the most important ones. Predictive chart patterns. Not as long to go through that one, might take you 30 minutes. And then price channels. Pretty simple concept, but again, there's a lesson, a video, an assignment, and a test. This is all theory. And you don't need to go through all of this, but I want you to at least go through the first half or so, and then the other stuff we touch on later on. You may never want to trade an option, so studying option basics isn't going to be that important. But it's all online. What that allows me to do is make updates and modifications and add new content when it's necessary. I might find a new concept that I want to teach, or I might want to change how I teach something, and so I can add it here because it's all online. And if you are a member that took one of my courses 10 years ago, you benefit from that because you always have access if you have purchased this stuff. And that includes all of those updates. Then we have in the Investor or in the Education Center the actual strategies. So this is the rules for when to buy, when to sell, manage risk, process, step-by-step, access to the market scans. And you can see all of the strategies there. You also have the exit rules, which is a separate lesson, but again, a written lesson and a video taught by me, written by me, based on my 30 years of trading. Okay, so that's the Stockscores Education Center. So that'll be step 1. You can start that tonight if you want. If you register online, I'll show you how to do that in just a moment. You can start immediately. If you want to start in 2 days, whatever, it's up to you. But give yourself some time to go through that online material because you'll get much more out of step 2. This is step 1. Step 2, whoops. Step 2 is the live webinars that I'm going to do on May 1st and 2nd. May 1 and 2nd. So in those webinars, it's an hour and a half, 2 nights in a row. So starting at 6 o'clock Pacific time till 7:30, we're going to just go over the theory. I used to do it as a 3-hour class on a Saturday, but I think some people found it a bit long. So I've broken it up now into 2 pieces. Those webinars are recorded, so if you can't catch one of them or both of them, you can watch the video later. The only downside of not being in there live is you can't ask questions live. You have to email me your questions, but that's fine. I answer questions within a day. So that's step 3. Step 2 rather. Step 3 is optional, and that is I'm going to teach a live class where I really go deep into the strategy rules, and I give you all the little tips and tricks and things that I've learned over the years that can really help performance. Now I say it's optional because you're not going to get information that you wouldn't get here, but by coming to the class, I think you will learn it quicker. Now, I'm only teaching those classes in 2 cities, in Calgary on May 4th and in Vancouver on May 11th. If you are not in Calgary or Vancouver, you can still watch the recorded version of that class if you desire. And I'll talk about pricing and all that kind of stuff in a moment, but I know that I've got people in this webinar from all over the world. My heaviest concentration is in Calgary and Vancouver, and that's why I teach classes there. But if you can't come to Calgary or Vancouver, you can buy access to the video, which will be like a 6 or 8 hour video broken up into pieces for each strategy that we're going to cover. We're going to go through a day trading strategy, actually 2 day trading strategies, a swing trading strategy, a shorter term position trading strategy, and a longer term position trading strategy. And look at different scenarios for different kind of traders. And then step 4 is the live market scanning webinars that I will do May 6th to the 8th. Again, in the evening, we're just going to do market scans together, practice, because although the theory is pretty simple to understand, there is a benefit to seeing me apply it and go through step by step. So we'll do that 3 nights in a row, hour or so each night, and you'll learn it quicker by doing that. The course material gives you exclusive access to Stockscores tools. I say exclusive because the only way that you can use my tools is if you have purchased the investor or active trader course. I don't want thousands of people using the Stockscores website because it takes away the opportunity. The more people that use something, the less value it has. And I use these tools myself for my own trading, and so somewhat selfishly, I suppose, I just don't want to have thousands of users. And so I don't teach a lot of people every year, perhaps only 100. And the other thing that I think is most important with the learning approach that I provide or offer is support from me. And so when you have a question, you email me. If you pick a stock, let's say you did your market scan tonight and you liked KEG, Key Energy, you could email me and say, Tyler, I ran the Stockscores Simple or the Action Break scan. I think Key Energy looks pretty good. Am I on the right track? I cannot tell you whether you should buy it or not. That's up to you, but I can give you my feedback on whether you are applying the rules correctly. And that's a great resource when you're learning. Because one of the things that people, I think, struggle with in the early part is just confidence, and having not practiced a lot, you have some uncertainty, and I can sort of walk you through so that eventually you don't need me anymore. And that's my goal, is to get you independent so that you don't need me anymore. So the learning process. Step 1, register for the course. You have until Saturday this week to register if you want to get some of this online material for free. So that's Saturday the 27th. We'll talk about that in just a moment. So you can register tonight, tomorrow, whenever. The sooner you register, the sooner you can start learning that online material. That's step 2, is review the online material. Then attend the overview classes Wednesday, May 6th at 6 p.m., Thursday, May 2nd at 6 p.m. We'll go for about an hour and a half on those evenings, just covering theory. Then for the people in Calgary, you will come to the Saturday class on May 4th at the University of Calgary. Once you've registered for it, you'll get an email with all the details. Lunch is included. It's 8 hours of learning that day. It's not the theory, though. The theory will be taught here. This is the application, much more detailed and into the actual strategies. Vancouver class will be Sunday, May 11th. Sorry, that says Sunday. That should be Saturday. Sorry, Saturday, May 11th in Vancouver at Simon Fraser University downtown campus. And again, you'll get lunch and all that kind of stuff. We cater it in. And then the final step, which sort of gets sandwiched in between these 2 dates, is the live market scanning. So Tuesday, Wednesday, Thursday, Tuesday, May 6th, Wednesday, May 7th, Thursday, May 8th at 6 o'clock in the evening, we will run market scans for about an hour. The first night, I'll do most of it for you. The second night, I'll make you try to evaluate these opportunities, write down the symbols that you like, and then I'll give you my feedback so you start to learn even better. So the benefits of taking this course, which is taught twice a year, basically, at least traditionally, although like I said, I haven't done a live one in 5 years. But the Stockscores tools and the strategies that I teach really do give you an advantage over other investors. The tools allow you to search through thousands and thousands of stocks in only seconds. The strategies are based on 30 years of experience. They're not something I dreamt up yesterday. I have been using these things my whole trading life. And they're all based on simple concepts that are quite similar across strategies. And they work well because they really leverage a very simple idea, and that is the stock market isn't fair. The big investors are what move the market, and we just have to figure out what they're doing. And we can do that by using a computer to find the stocks that are moving because large investors are accumulating them. So support from me is going to help you build your skill with confidence and less uncertainty. That exclusivity of membership to Stockscores means you're not competing against thousands of investors. Stockscores is small, and it's like that by design. My goal is not to make millions of dollars selling courses. I trade, that's my passion, but I have to cover the cost of the tools. I have to, reinvest money into building that website. Stockscores.com was not a cheap website to build, hundreds of thousands of dollars to build that website. My simulator, a couple $100,000 to build that. And so when you're buying a membership, essentially you're supporting the creation of those tools for us as a community to utilize. Risk management that I teach will focus you on capital preservation first and foremost. I want you to always put that as a priority. Capital preservation is number one. My education will save you time and learning. It took me 8 years before I was profitable in trading. I want you to do that much quicker. 8 weeks. When I learned how to trade the market, there was no one teaching how to trade the stock market like I do today. And so I had to figure it out myself, and it took me 8 years before I was really good at it. And then, of course, time is money. I want you to save your time, which allows you to start to get trading quicker, and that allows you to start making money quicker. But also because we have good risk management techniques, avoiding those big losses that really happen to so many people learning. They don't have the strategies, they don't have the experience to know what's best. And so the result is that they end up losing a lot of money on bad trades, but also losing money on opportunities missed. It's a loss if you miss out on buying a great trade because you don't know what to look for. And so those are some of the benefits that I can offer you. So how to join? So step one, you go to the Stockscores website in the trader training area and purchase the course. So you go to stockscores.com, go to trader training, go down to learn how to trade, and you can sign up right on this page. Now, I haven't spoken tonight about the active trader course. The active trader course is for day and swing traders. It includes the investor material. And so if you ultimately think you might want a day or swing trade, you really should purchase the active trader course because it gives you the investor course as well. It's a little bit more expensive, but if you ever want a day or swing trade, that's the route to go. I will talk about the active trader course on Wednesday during that webinar. Tonight, I just wanted to talk about the investor course. And so it's all there. You just click order online and you're ready to go. It's $2,495. You get 6 months access to the tool for free. And then it's $300 a year to keep your access. That $300 a year is really just paying for our data feed so that we can keep the charts and the market scan tool and all that stuff up and running. So if you do that before Saturday, April 27th at 9 p.m., you will get that overview class, which is the Wednesday and Thursday night class, the theory overview, and you will get those market scanning webinars for free. So if you sign up today, tomorrow, anytime before Saturday, April 27th, so that's this Saturday, coming up here at 9 p.m., that's the cutoff, you will get all of that extra stuff for free. Now, if you also want to attend the Focus Live class in either Calgary, Vancouver, or do the video version, you first have to buy the Investor or the Active Trader course. And once you've done that, you will then be able to purchase the live class. And so to do that, you go to upcoming events under Trader Training and go down to the bottom. And there's where you can register. So notice here how it says Investor or Active Trader. Those are the prerequisites. You have to have bought those first. So you can do it in 5 minutes. You can buy the Investor course 5 minutes later. You actually have to log out and then log back in again to the website. And then you will be able to buy the Focus Live class in Calgary or Vancouver. So if you want to do Calgary, you sign up on this one. You just go down to the bottom, click on Register Online, and it adds it to your shopping cart. Or if you want to do the Vancouver one, you select Vancouver. Seems simple. And if you want to do the video version, you do the video version right there. Right? It's all on the website, all automated, pretty simple. Course pricing, the Investor course is $2,495 Canadian. For Canadians, we also charge GST. If you are outside of Canada, you do not pay any of those taxes. It's Canadian dollars, so for someone in the US, you can take about 25% off of that. So it'll be, I don't know, around just under $2,000 US. Active Trader course, again, includes the investor course, but also goes into my day trading and swing trading strategies that I will talk about on Wednesday. That's $34.95. If you did the active trader course a year ago and you want to upgrade to the investor course, it's $1,250. You just pay an upgrade fee. And again, the optional add-on is to come to that live class in May or do it as a video. So the live class in Calgary or Vancouver is $495 for that 8-hour class. If you want to do it as a video version, it's $395. Same content. The only difference with a video version is you have to email me with your questions rather than put up your hand and ask. All right. So to summarize, the stock market is not fair, and I really encourage you to give yourself the knowledge, strategies, and tools to beat it. I've been doing this for a long time. I've made every mistake in the book, and I've got a simple approach that works well. You know, even small improvements in your annual return in your retirement portfolio can have a huge effect on the long-term performance and the time it takes to get to retirement. You know, if the market earns 8% and you can earn 10%, 11% a year, which isn't to me that big of a return, but if we're talking just about small numbers in terms of improvement, that can mean hundreds of thousands of dollars difference to your retirement portfolio over the course of a building of that portfolio. And so I think with my 30 years of trading experience and my 20 years of teaching, you've really got an unrivaled resource to take advantage of. Because I only teach a small number of students, it means that I can really provide that personalized service to my students to help them succeed. Now I'm going to put up a poll in just a moment. Actually, we'll put it up now. And it's essentially whether you would like some follow-up. And then after this, we will take a look at some individual stocks. So I'll put this up now. Yeah, click on this again here. So this should come up in just a moment. Should come up in just a moment. Why isn't it coming up? Oh, it's not letting me. Let me try this again. There we go. All right, so you can click on the one you're interested in. The whole idea here is oh no, this is the results. Hold on a second. I don't know why it's doing this. Just give me a moment. If this doesn't work, I will, You know, I'm going to try it from my other screen here just a second. You can start thinking about the questions you have for me, and I will answer those in just a moment, but I want to try and get this poll to work. Continuing along with questions. So I'll do the stocks last. We'll just look at general questions first here. Do I teach portfolio management such as diversification, number of open positions, sector rotation? A little bit. I actually am not a big believer in diversification as a risk management technique. You know, you achieve the market's return through diversification. You beat the market through focus. And I like to focus on the areas of the market that are moving. And incidentally, Warren Buffett does the same thing. He does not diversify. He is very concentrated in where he puts his money in the areas where he feels that there are the best opportunities. Just a lot of stock questions, and we'll come back to stocks in just a moment. So the course includes everything except the live class yes, correct. So for $24.95, you get the investor course plus the webinars on the Wednesday and Thursday, plus the market scanning. The only option is if you want to just do the live course, then that's an extra $495. And the benefit of coming to the live class is I'm just going to force you to learn it in a day. If you're independent and you think you can guide your way through it, then I don't think it's necessary. And yes, if you attend the live class, you also get the video version. That's for everyone that attends. Incidentally, if you ask me about a stock, I'd ask that you put in the symbol and the market, because I don't know I know a lot of symbols, but I don't know all of them. I'm just trying to get some of the general questions here. Are they over? Yes, the overview nights that I do in May will be recorded. Yes, so you will be able to watch those 100 times if you like. Do you need to subscribe to TradeStation as well? No, you do not. Especially for investor, you don't. Even for my active trader, I've built some things where you don't really need TradeStation anymore. And I'll talk about that more on Wednesday. But for the investor course, you definitely don't need TradeStation. Just access to Stockscores. Are the courses on a set schedule, or are you able to do them at your own pace? You can do them at your own pace. You can take a weekend to go through all the material. You can take 2 years. Totally up to you. There's no time limit. Just go through it at your own pace. I will always be there to help you when you have questions. What typical rate of return on risk percent are normal using this system? There's so many variables in that because we have literally hundreds of trade possibilities. I will tell you that last year my position trading picks earned 28%. Day trading, you can certainly get a lot higher than that. Do you speak French, Tyler? I do not. I'm sorry. I've done a lot of business with companies in Quebec, but I have no skill speaking French. Is the fee annual or is it a one-time cost? So the upfront, like the course fee, $24.95 or $34.95, that's a one-time cost. And then the only other thing is for access to the market scan tool is $300 per year. Now you get 6 months included for free. And then after that, you renew for $300 per year. And the reason we have to charge that $300 is it costs me about $6,000 a month to buy data from the exchanges, keep the website up. It's actually more than that. So it's not cheap to keep the Stockscores website up. So I just spread that cost over our membership so that we can keep those things. So another question, why do you not make a blog on your website in order to subscribers can learn questions of other subscribers? Well, I do a weekly newsletter, and I guess that's my blog, but I don't have a message board. I used to have a message board where people could talk to each other, but it just got so much abuse from people spamming it and trying to market crap, and it was just too much of a pain, so I took it down. Another question, do you need some previous background in stocks, or can someone new to this also learn? I assume that you know nothing, and so we teach the basics first. If you don't have any background knowledge, it'll take you longer to learn because you got to learn the basics. On the other hand, you also don't have any bad habits, and so that I think is important. I'm just going to close this poll. It's been up there long enough. Sorry. So now we will do some stock questions. There's my contact info. Whoops. So if you have any questions, you can email me. Follow me on Twitter. Definitely subscribe to the Stockscores YouTube channel. It's free content that I'm putting up every week at least, and sometimes a few times a week. So subscribe to the YouTube channel. For live trading, $195, what does that include? So this question is about the active live service where you essentially listen to me talk my way through the trading day. You see my screen. So all of my indicators running in real time. It's really for day trading and swing trading. And again, tonight we're talking about position trading, but I'll talk more about active live on Wednesday. All right, so let's try and do some of these stock questions. There's quite a few. I don't know that I'll get through them all, but I'll try. So let's go back to Stockscores website here, and I'll just try to pull up some. So T.shop. So SHOP, I would consider a hold. It's got nice upward momentum. I would not consider it a buy as it's too late. It's well into the upward trend already. Try RQB. Now, I don't know what market that's on, Kimberly, but I will assume maybe it's Canadian. So T.RQB. Nope. Let's try Venture. This is why I need you to let me know what market it's on so that I can find it. Is it on maybe the CSE. There it is. All right, so by the way, for Canadian Stock Exchange quotes, you have to enter the symbol in like this. So the symbol and then a .cn, so RQB.cn. That's how you have to enter in symbols for that exchange. This stock looks pretty good. It broke a downward trend line right here with some strong volume. It hasn't gone a lot yet, but I like it. I'd give it a 6.5. Excuse me, I have something in my throat. All right, ALEF on Toronto. So Toronto, you put in T dot and then ALEF. I don't love this. It's below its downward trend line. It's come up the last few days. If it can break the downward trend line, then it gets better. It does have some support there. I think it's okay, but I wouldn't buy it. If it can break the downward trend line with some strong price action and strong volume, then it gets interesting. But right now, I wouldn't do anything on that. T.BIR, good hold for sure. It's got optimism. See how we've got rising bottoms on that chart? That's why our sentiment stock score is above 60. It needs to break through 4. It'll find resistance up here at 5.25. I think it's a good hold. I don't see really a reason to buy it here, but if you own it, I would stick with it. Quite a few of you asked for that stock. MBRX, this was the big mover today, huge move. Had some treatment for lung cancer or something. So this was on our day trader list today. As a longer term trade, I just think the risk reward isn't very good. You know, the stock made this move from $1.10 to $3 in one day. And that move, I mean, you think about it, in a 6-week period there, the stock made a fraction of that move. And so it just has priced in a lot already. I think it's definitely a stock to watch for day and swing trades, but I would wait for a pullback and then a start to move higher. And what I would watch with this is a 10-day, 30-minute chart. And what I'd like to see is for it to pull back for a little while and then break the pullback. And then it gets interesting. But I wouldn't chase it here. It's just too hard to predict. WSP on Toronto. So again, Toronto, put T dot and then WSP. Good hold. It broke its downward trend line back here. That was, to me, the entry price at 67.5. It's now at 73. I'm just going to take a look at a longer term chart here just to get the... Yeah, so the problem here is it's coming up into that long-term resistance. You can see it's held this upward trend line quite nicely even through the correction. Bounced off of that upward trend line within a few weeks. It's come back to the highs. I think it goes sideways here for a little while. I think it's a hold, but what I worry is that it breaks this. And if it breaks that upward trend line, I would be a seller. And I say that because it's rallied into resistance. No reason to sell it yet, but it is a bit worrisome. All right, another one, AMRN. This was also a day trader today. Ended up kind of fizzling out as a day trade. I don't see any reason to buy this. It needs to break that downward trend line first. This is what's called a pennant pattern. And I'd like to see it break out of that pattern. If it does, it probably gets stuck there. And so even if it breaks out of that pattern, it doesn't have enough upside potential to justify the risk. So to me, it's a stock that doesn't really get me excited. I don't think it's bad. I just don't think it's good either. All right, another stock, T.TD, Toronto Dominion Bank. Also trades on New York Stock Exchange, but I'll pull up the Canadian listing. It's, it broke the pullback right there. It's got a bit of a funny pattern. It has this downward channel, which is just recently broken out of, largely because there's some life coming back to the energy sector, which, let's face it, a lot of the Canadian banks depend on that energy sector for some of their profitability. So I would say it's a hold. I don't think I would rush out and buy TD Bank, but it's a hold. What do we got here? Sorry, I know I'm going to miss some of these, but I'm trying my best just to read through all your messages that you've sent me. T.PEY. I don't really love this. It has got a negative pattern. That's a descending triangle. If it breaks down through support, it's going to move lower until it can break this cycle of falling tops. I would not touch it. If it breaks the cycle of falling tops, then it starts to get healthier, but I don't know that it's necessarily better and worth buying. So I would sort of shy away from this one right now. CNQ, which is another energy stock, Canadian Natural. This stock was a nice buy back here. I think I did it in my newsletter on this day, or close to that. And so it's a hold. It's already had a good run. Feels to me like it probably pulls back near term, which would be a buying opportunity if it can pull back and then break the pullback, then resume its upward trend. That gets interesting to me. But to chase it here, I don't think I would do that. It's a hold if you own it. All right, I'm going to do one more. Badger Daylighting, T.BAD. Again, oil related, oil service. Nice upward trend. This is an upward sloping channel. I would not buy it. I would hold it. If you bought it, it had a nice entry point back here. There's your action candle from a good pattern then. And it started this upward sloping channel. The only way I would trade this is if it pulls back down to the bottom of the channel and then breaks. So like it did here. That's the kind of setup I would maybe be interested in. But to buy it up here at the top of the channel, too risky, but definitely a stock to hold if you already own it. All right, so that is about the end of my presentation. I want to thank you all for joining me. A reminder that I'll be in Vancouver tomorrow night. So for those of you in Vancouver, come on down, say hi. I will be at the UBC Robson Square, which is downtown on Robson, but it's downstairs below the ice rink, believe it or not. So you got to go into the UBC campus downtown, go downstairs and see us there. I've also got some webinars through the rest of the week. On Wednesday, the day trading webinar, which is at 2 o'clock. So if you want to sign up for that, go to upcoming events. Go right here, how to be a successful day trader. Wednesday at 2 p.m. Pacific time. And then another one Thursday, where I'll do sort of a final overview of the different trader training options. And that is Thursday, April 25th at 6 p.m. Those are all free. And of course, you want to register for the live presentation in Vancouver. That's on that page as well. So I want to thank you all for joining me tonight. Hopefully it was somewhat educational. And again, if you have more of an interest in day and swing trading, make sure you come out and join the webinar on Wednesday at 2. And otherwise, I hope to talk to you again soon. Let me know if you have any questions. There's my email address on screen. You're welcome to email me anytime. That goes directly to me, not to someone that works for me. So I answer those questions myself. Thank you, everyone. Have a great rest of the night and trade well.